Hello, everybody. This is Patrick MontesDeOca, CEO of the Equity Management Academy, with a weekly podcast for December 11, 2020. We're going to take a look at the last report that we published in the Associated Press, basically titled Gold. Don't get left behind the short squeeze. This article was published in Seeking Alpha on December 11, 2020 at 9:46 a.m. Eastern Time. Summary. After the 2089 high of gold in the summer, gold has moved down about 50% from that high. Our goal is to increase our holdings in gold long term. We like what we are seeing in gold. We continue to buy corrections. More recently, grain and soybean prices are exploding and are a major signal that food inflation already is here. Gold. On Wednesday, 7 a.m. Pacific Standard Time, the gold was trading at 1851.70, up about 12.30. The market was trading above the variable changing price momentum indicator, daily, weekly, and monthly average prices. Although this does not identify a day trading signal, it does identify the trend momentum of the market. With the market above the average daily, weekly, and monthly, prices are in an uptrend. And the targets that we're looking at is 1870 as the sell 1 level on the daily. The weekly target is 1874. The daily sell 2 level is 1898. The weekly sell 2 levels is 1906. So the first target is 1870 to 1874. The prices almost match harmonically, which is a very, very powerful sign. As we take a look at Nugget, when this report was published, Nugget was sharply higher as all the other derivatives, and we have confirmation that the low that we saw yesterday in this area of 1824 in the gold market could be the second higher low confirming that the bottom was made at 1767. On November 30th. It did not reach the 1822, which was the daily level. When the market came yesterday, came down toward that buy 2 level, we reached the weekly levels of support in this area where buyers are likely to come into the market. After the 2089 high of gold in the summer, gold moved down about 50% from that high. Now we have established a low. The 50% was a high from the low that was made in March 1451 to 2089. And we're looking at a 1771 as the 50% Fibonacci. Now we have established a low which appears to be the completion of this retracement. And it looks like gold may be setting up to once again challenge those highs. The 1768 level, which is the recent low, is potentially going to be the annual low. Our goal is to increase our holdings in gold long term. We like what we are seeing in gold, and we continue to buy corrections. Fundamentals. A high was reached on November 9 when the efficacy of the vaccine was announced. And the market, however, is not trading based on vaccine news. Gold is looking at the damage that was done by the pandemic. It devastated the world's economy. Unemployment is still around 10 million unemployed. We have yet to see the effect of the second lockdown and the economic impact it's going to have on some of the small businesses that survived the first wave. They may not survive this second lockdown. That means there will be more economic damage and more pressure on the Federal Reserve to print more money and pump more stimulus into the economy. More pressure is being put on the system. Confidence is being tested in the current system. Many people have been a victim of the system collapsing. The system was manipulated to create an elite group who took advantage of the system by keeping interest rates low, printing more and more money, and creating a debt economic system. And the system has led to the biggest wealth gap in U.S. history. Very few are in a position to borrow money, but those who are can borrow at almost zero interest and invest it, such as in stocks, and reap major profits. A lot of these disparities in the system are being questioned and have become hugely unstable. Whenever the economic system historically collapses, gold retained its value. The US dollar has already lost 99% of its value against and since 1971, when the US went off the gold standard. Very few notice the silent killer that is inflation. More recently, grains and soybean prices are exploding and are a major signal that inflation is already here. Soybeans are up 50% recently. The inflation now has not reached Main Street, has not reached Main Street yet. It's mostly in stocks. We're looking at the price of soybeans, which is the leading economic indicator of the cost of food, hit a high of $12 here, November 24th. And this represents the cost of food. We're going to see this increase reflected in retail prices if we are not already are seeing it. The inflation factor went into the stock market, as you can see, reaching a high of 37.14, 37.15 on December 9th, 2020. Interest rates have been cut to almost zero, while at the same time the Fed has quadrupled their balance sheet. Since 2008, a staggering rate in the past year. The graph for debt looks like a hockey stick, straight up, which is why interest rates had to come down to near zero. Or how could they pay for that debt? With debt so high, interest rates will have to remain low for a long time. If the economy begins to pick up and inflation starts, what are they going to do? If they raise rates, the debt will quickly become unmanageable. Amidst all the news and chatter, we use the VCPMI to focus on what the market is telling us in order to trade without emotion. We are also trading the Bitcoin market by using the Grayscale Investment Trust fund that basically is the trust for Bitcoin, registered with the exchange, and it follows the direction of Bitcoin in the cash market. And so the difference is that we do not believe that Bitcoin is a currency. To compare it to gold, which has been around for thousands of years, is a mistake. Bitcoin has only been around for 10 years approximately, and we trade it, but we don't see it replacing gold either in our portfolio or as a currency. Bitcoin is not a tier 1 asset. You cannot borrow against it. Once something is all over the media, it usually means it's headed for disaster. And it appears we are likely to move in a multi-month correction if this 24.12 target, which is the high that we saw, and we took out some money at that level, and we bought gold. We strongly recommend not taking money out of the gold market and buying Bitcoin. This would be a big mistake. What you want to do is trade Bitcoin either through the futures markets or the Grayscale Investment Trust, GBTC, short term, and take that money and build a foundation of gold and silver. Central banks may soon issue virtual currencies which will regulate Bitcoin in some way. At least they would heavily regulate other virtual currencies that are not backed by the government. Regulation for Bitcoin and virtual currencies is coming. So it is a big risk to put it all in Bitcoin. Be careful. Be prudent of the inherent risks, many of which have not been defined. We're looking to trade GBTC on the long side. It appears that we came down to a level of support, and it is a great tradable instrument because it has tremendous volatility. That means it's great for short-term trading. If you can manage the volatility with a trading system, such as the VCPMI, is an intelligent way to trade the market. We went long. We took a buy signal on GBTC at 1945. And we've already have taken some profits out of the market here on this rally that we saw the market up to 2150. Review. Continue to buy corrections in the gold market. Ideally into levels of that previous low of 1767 to 1789 as we complete this week.